We're back for another update. Let's take a look at cake over here. Very bullish on cake. I think it's going to be forming a macro leading diagonal pattern in which the waves slightly overlap with each other. And usually you get this in coins with a lot of growth, a lot of real world user growth. And I was explaining this in my last video, and this is the same reason we got a structure like this with Solana, Ethereum, uh, very similar structure to that of Litecoin. You get these expansive type waves in which the waves slightly overlap with each other. Now this is called a leading diagonal, and once you reach the fifth wave, that would be your macro wave 1. Then you come down for an ABC before you for your wave 2 before you come up for your wave 3 to the upside. Okay? This is exactly what it would look like this. Okay? Now, it looks like we're still within our macro first wave, right? This is our macro first wave. And within this leading diagonal, we haven't even completed the third wave to the upside yet. We're still within this third wave right here. Okay? And like I said in my previous video, we were going to break out of that ascending triangle on the small time frame. And just so you're a little bit more familiar with the leading diagonal, you're going to have an ABC for each of the subwaves, right? So you have an ABC up for your wave 1, ABC down for your wave 2, ABC up for your wave 3, and we're currently within the C wave of that third wave. We're within wave 3. Let me see here. We're within wave 3 of 3. So that'll be the most explosive next to the fifth wave, which is the most steep. I would say, yeah, the fifth wave would be the most steep, and then the next explosive wave before that would be the third wave. I would say that the fifth wave is the most steep because this is where all of the FOMO hype and this is where all the FOMO and hype kicks in on the fifth wave. Hence why you tend to have fifth wave extensions in crypto a lot, where the fifth wave extends. You also tend to have first wave extensions when a lot of people are anticipating a move. So this is a first wave extension where the first wave is extended, and then you have a 2, 3, 4, 5, right? Fifth wave extension is more of something like this. All the waves are normal, and then you have the fifth wave extension like this. Or you may have a something like that, right? And then this is your fifth wave. You see how it's the most steep? That's because of all the hype and FOMO, media attention. People don't want to miss out at the end, right? They want to get in on things that are pumping. And cake looks pretty good breaking out of this ascending triangle over here. We tapped it. We tapped this previous resistance as support. So you see this resistance that we used about 3 times. Well, we went above it, tapped it as support, and now we're seeing continuation up. Okay, so the next target over here would be the technical target of this ascending triangle, which would be sitting at around the $3.34 region, which would also be the equilibrium of this interim downtrend. Okay? So this is our EQ right here. Once you get above the EQ and this 50-day moving average, let me just add this to the chart. Okay, so you see this 50-day moving average? Right here. As soon as you get above the 50-day moving average at $2.80, find support above it, then it's very likely we make a move towards the EQ, sitting at 330. Get above 330, then it's going to be fireworks. So the next target for the like when we're measuring the targets using Fibonacci, The next target would be sitting at 594, and if we zoom out a little, the major target is still $11 to $17. We would likely see a 50% retrace, right? So this over here, below this yellow box right here, I'll show you. Below this yellow box right here, that's when all of the the new people get in, um, or the people see that see the future. This is where all of the early adopters get in, right within this region right here. Okay, you see this squiggly line that I drew? Right in here. This is where all of the early adopters get in. Okay? And we're still down by 94% from the all-time high. So if we go from the 2021 high all the way down to the current price, we're still 93.7% down. So below this yellow box, buying under here, you'd be buying at a discount relative to where cake is going to go for the bull market. Now, once we get to 11 to 17, these blue boxes over here, this is likely where all of the mid-curvers step in, okay? So you have your early adopters. Once you hit these targets, all of the early adopters, not all of them, but most of them, they take profit. Price comes down for a 50% retrace measured from our wave 2 low up to our projected wave 3 high. So it would come down to around that 950 region. This is when all of the mid curvers step back in or step into the market, and they drive it up for that one last wave, which would likely be the most steep out of all of them, the fifth wave extension. And then this is where all of the late adopters get in, right? This is where all of the people who miss the boat over here and over here, they get in over here, and then they buy all the bags of all the smart money offloading. Okay, so this is the different phases in the market, right? You have three phases to an uptrend. You have the early adopters, mid curvers, and then the people that get in late. You want to always be getting in at a discount. So you'd want to be getting in around this region for the anticipation of a move towards our blue targets and our red targets over here. Okay, so this is what I think with Pancake Swap. I think it's going to be huge, and yeah, we're looking at a top target sitting at around $63. So it's sitting at 54, 60, and 71. Okay, so around this region here. And what you guys can actually do is use the moving averages right here. Okay, so you have the put the 21, 50, 100, 21, 50, 100, and 150-day moving average. The reason we're doing 150 days is because that'll act as our safety net. And I've back tested this strategy many times. Okay, so now watch, right? Back in 2021, you wouldn't sell the bag as long as it stayed above all of these moving averages over here. Even when we had this dip over here, a lot of people thought it was done and it was over with. But all we were doing was coming down to the 50-day. Then we had our peak over here in May. And let's say it went back below let's say it went back below all of the moving averages over here. Sorry, right over here. Like that. And let's say you didn't end up selling. You would wait. You would keep waiting, keep holding. And then once it crosses down below the moving averages again, then you would offload right here. And you would still be catching the top relative to how low we went in this bear market. Okay, so the trick is to hold the bag. So let's say you put all your moving averages on the chart, it goes down below the moving averages and you don't sell, you wait for it to come back up above it, and you still don't sell, and then once it goes back below the moving averages again, that's when you would offload the bag. So you would wait for the second push down below the moving averages for confirmation, right? You see how it went below it over here, and then it went back up again, and then it went back below again, right? Once it goes back below again, that's when you would offload it. And if you apply the same strategy to many other coins such as Hex, Solana, XDC, you would have been able to catch the top. So a lot of people they underestimate the use of these daily moving averages. So this is what I think with Cake. I think it's going to do very well. And if you want to stay updated, then click the link in the description below to join the Discord, so you guys can stay updated with this analysis along with all of your favorite coins over here. You guys can ask me any question you want. All of these coins you guys get right over here. Over 350 assets you guys can choose from. And yeah, you guys can ask me any question. Like, let's say the coin is not over here, the asset is not on here. You can ask it here and then I'll make a room for you. But yeah, hope you guys enjoyed the video. If you have any questions, please feel free to let me know. Peace out and take it easy. See you in the next one.